Have you ever wondered why gold investors are suddenly paying attention to Bitcoin's relationship with precious metals? On today's episode of the TFTC podcast, I'm sitting down with James Check, a veteran on-chain analyst who's been studying this fascinating shift. James has an incredible track record of predicting Bitcoin market moves. He accurately called this entire consolidation phase we've been in, and he's identified a pattern in how Bitcoin and gold are starting to interact that most investors are completely missing. In this video, we're going to explore exactly how Bitcoin could replace gold as the world's premier store of value, what specific developments are accelerating this timeline toward 2025, and most importantly, what this means for both Bitcoin and gold investors. Through my work at 1031, I've seen firsthand how institutional investors are starting to think about Bitcoin in relation to gold, and what James reveals in this conversation completely changes the game. If you're enjoying this type of content, hit the like button and subscribe to the channel. This is just a small portion of my full conversation with James on the TFTC podcast. You can find the link to the full episode in the description below. Let's dive into how Bitcoin and gold's relationship is about to fundamentally change.
When I play around with these ideas, right, and my old man's got Bitcoin, I have to pare back where I think it's going to go, because otherwise he just thinks I'm insane. I wouldn't be surprised if we got to 250 in the next, 3 years, something in that kind of period. I am certainly in the camp where I think bear markets are not going to be the 80 down. I think a lot of people are going to be expecting that 80 down, and they might get a 50 or a 45 or a 65, and then away it goes again. I don't think we're going to get, again, it depends on all sorts of factors, but I think generally speaking, unless we get GameStop buying at the highs, right? If we get GameStop buying at the highs, maybe a 70, but if we don't, I think that the bears will be more muted.
James brings up an interesting perspective here about Bitcoin's future price action that aligns with what we're seeing at 1031. His prediction of $250,000 in the next 3 years isn't just a random number. It's based on changing market dynamics and institutional involvement. What's particularly fascinating is his take on future bear markets. Traditionally, Bitcoin has seen dramatic drops of 80% or more during bear markets, which has scared away many traditional investors. But as the market matures and more institutional capital flows in, these drops are likely to become less severe. Think about it like a growing company. In its early days, the stock price might be extremely volatile, but as it becomes more established, the price swings tend to moderate. The comparison to GameStop is telling. It highlights how market maturity and the type of buyers involved can significantly impact price behavior. This moderation of volatility is especially important for institutional investors who often have strict risk management requirements. When Bitcoin's price swings become less extreme, it becomes easier for these large investors to maintain positions and even add during market downturns. We're already seeing this pattern emerge. Each successive Bitcoin bear market has shown signs of becoming less severe, with higher lows and shorter duration. This changing market behavior suggests we're entering a new phase in Bitcoin's evolution where traditional market patterns may no longer apply. But there's something even more interesting about how these price predictions relate to traditional assets. Let me show you what James means.
So I think people will lose track of where the top is, right? Where is the cycle? Where did it start? Is that a bear? I don't know. Did we just go through a bear? Maybe, right? So there's all these interesting dynamics. So look, I think 250 is reasonable, right? It's not completely ridiculous. We'll get up into the hundreds. I think I see so many people just talking about this is where it's going to end, like TradFi guys. It makes sense at 100K. It makes sense at 250K. I think the concept of relative value, Bitcoin's about 10% of gold.
The concept James introduces here about losing track of market cycles is profound. At 1031, we're seeing this play out in real time as traditional market patterns in Bitcoin start to break down. When he talks about people losing track of where the top is or whether we're in a bear market, he's describing a fundamental shift in how Bitcoin trades. Traditional traders are used to clear market cycles, bull markets followed by bear markets with obvious tops and bottoms, but Bitcoin is evolving beyond these simple patterns. The comparison to gold is particularly important here. Bitcoin representing 10% of gold's market cap shows just how much room for growth remains. Just like the early internet compared to traditional media, Bitcoin is still in its early stages of eating into gold's monetary premium. This transformation of market cycles is something we're witnessing firsthand in our conversations with institutional investors. They're beginning to view Bitcoin not as a speculative asset with clear buy and sell points, but as a long-term monetary asset that requires a different investment approach. The psychology of the market is shifting from trying to time perfect entries and exits to focusing on accumulation and position sizing. This change in perspective is crucial because it suggests a maturing market where price movements become more about fundamental adoption and less about speculative trading. The fact that traditional finance professionals are starting to see Bitcoin as making sense at both $100,000 and $250,000 indicates a broader understanding of its potential as a monetary asset.
Now the gold's run, but if Bitcoin can get to 25% of gold, right? I think you and I would agree that Bitcoin is a superior asset to gold. And, case in point, if you've ever bought physical gold, it is a real pain in the ass. You got to go to a physical place, you got to pick it up, you got to store it in a safe. Like, it's a physical thing. Now that's great because it's self-custody, but I could also buy Bitcoin and send it to my cold card and it will take me a fraction of the time. It doesn't even require a bus ticket, right? You've got all these different dynamics where Bitcoin is just vastly superior.
This comparison between Bitcoin and gold that James makes cuts to the heart of why Bitcoin's future price potential is so significant. At 1031, we often discuss the practical advantages of Bitcoin over gold with institutional investors. The physical limitations of gold that James describes, having to physically move it, store it, and secure it, are real barriers to adoption that Bitcoin simply doesn't have. But it's not just about convenience. When James talks about Bitcoin being vastly superior, he's referring to its programmability, its perfect divisibility, and its ability to be transferred instantly anywhere in the world. These advantages mean that Bitcoin isn't just competing with gold. It's expanding the possible uses of sound money in ways that weren't possible before. The practical implications of these advantages are enormous, from reducing storage costs for institutional investors to enabling new forms of international trade and settlement. What's particularly interesting is how these advantages compound over time. While gold's limitations remain constant, Bitcoin's infrastructure and usability continue to improve. We're seeing this at 1031 through the companies we invest in. They're building tools and services that make Bitcoin increasingly accessible and useful while maintaining its core properties as sound money. This technological evolution, combined with its monetary properties, creates a powerful argument for Bitcoin's potential to not just compete with gold, but to potentially surpass it as the premier store of value.
So can it get to 25% of gold? Of course it can, right? That's kind of obvious. So can it get to 100% of gold? Not anytime soon, but what would 100% parity be? Well, it'd be about 10.8 kilograms of gold per Bitcoin. Right now, it's just under one kilo, right? 30 ounces or something like that. So, that's that long-term view. My price target's actually in gold terms, right? 10.8 kilos. That's my actual number, which is, I think that's like 600,000 or 700,000 or something ridiculous.
The way James breaks down Bitcoin's potential in terms of gold weight rather than dollar value is a powerful way to think about Bitcoin's future. At 1031, we often emphasize to investors the importance of thinking beyond dollar terms. When James talks about 10.8 kilograms of gold per Bitcoin as a long-term target, he's describing a fundamental shift in how we measure value. This isn't just about price appreciation, it's about Bitcoin potentially becoming a new unit of account. The fact that one Bitcoin currently equals roughly 1 kilogram of gold provides a tangible benchmark for growth potential. While $600,000 or $700,000 per Bitcoin might sound extreme, in dollar terms, when you think about it in terms of gold weight, it starts to make more sense. This perspective helps cut through the noise of short-term price movements and focuses on Bitcoin's long-term potential as a superior form of money. What's particularly fascinating about this approach is how it removes the dollar from the equation entirely. In a world of increasing monetary uncertainty, measuring Bitcoin against physical gold provides a more stable reference point for value. The concept of Bitcoin reaching parity with 10.8 kilograms of gold isn't just about price, it's about Bitcoin potentially becoming the primary measure of value in a digital age. This shift in thinking from dollar terms to gold weight also helps investors understand Bitcoin's role as a monetary asset rather than just a speculative investment. Let me know in the comments what percentage of your portfolio is in gold versus Bitcoin. I'd love to hear how you're thinking about these two assets and if James's analysis changes your allocation strategy. Now that you understand how Bitcoin could replace gold faster than most expect, there's something even more important you need to know about what's driving Bitcoin's price higher. In our previous video, I break down how new Bitcoin derivatives are completely changing the game for institutional investors. The timing isn't a coincidence. These developments are creating the perfect conditions for Bitcoin to challenge gold's dominance. Click the video on your screen now to understand exactly how derivatives markets could accelerate Bitcoin's path to replacing gold. And if you're serious about staying ahead of these massive shifts in the monetary landscape, subscribe to the channel where we break down these crucial developments every single day. Stack sats and stay humble.